All right, so not much movement in terms of market activity, but at least a stronger showing for the shilling, coming in just above 92 shillings to the dollar.
Thank you for having me on the show. Yes, not too much activity on the market. Week on week, we've lost about 5%, and the Kenya shilling today at least gained some ground. So overall on the market, we're still very worried about the general performance and the general trend so far.
I mean, obviously, what will support the shilling are activities that we're seeing undertaken by the central bank deciding to hold back on reverse repos, probably at their next MPC hiking rates. But there's also the external factor of the oil price. With oil prices seemingly under pressure, it should reduce the import bill. Is that something you're managing and monitoring significantly?
Oh yes, energy import is always always had a very huge impact on the Kenya shilling's stability. So that's always something to look out for. That aside, we really hope that the central bank's move today will augur well for the shilling. Today they came in and pretty much set a high water mark for aimed at the currency traders, mainly the big banks, who have been in the central bank's opinion, using a very low central bank rate to kind of borrow and almost call it an arbitrage price, so make some money off that.
Right.
So we hope that the shilling will stabilize and gain more ground in the coming week.
Have you already calibrated the costs of the US downgrade and what that would mean for Kenya? Because effectively, a lot of African institutions and investors geared towards US banks, the costs of borrowing to rise, that should have some bearing on local economies. Have you assessed to what extent Kenya is going to be affected or has already been affected?
Well, the market, I think, has already been affected in multiple ways. In terms, at the very least, in terms of an erosion of investor sentiment because of our predominant dollar fixation. So that really has had a terrible erosion on investor confidence, and that has really been reflected in the stock market. On the currency front, we've seen a lot of now uncertainty but that is also because of a lot of more domestic factors, I think, in terms of the central bank's aspiration to bring inflation under control and kind of limit the foreign exposure. So yes, on the global scale, the dollar really is a big issue, but the central bank is really trying to step in and mitigate that and kind of filter through any direct hits of the Kenyan market. That aside, we really do expect not too much of an impact. I think the greater part of it has already been factored in to the pricing.
Let's talk about results coming through. Kenya Reinsurance, we've seen profits up 15%, very much on the back of better performance on the premium side, but we're also starting to see lots of claims coming through. How do you expect the company to perform going into the rest of the year?
Yes, the claims are indeed an issue of worry. I think they rose about 37% over the half year. So the net claims are an issue of worry for Kenya Re. That aside, also one other big issue for Kenya Re, and is of a kind of historical nature, is their portfolio exposure. Very, very exposed towards real estate. And now, should claims really continue getting out of hand, then the corporation would really be in not good a footing, because it's often difficult to immediately dispose of fixed assets, especially real estate income when under pressure.
I mean, obviously the insurers are under the spotlight at the moment because we're starting to see quite a few of them come to the fore. Even with this British-American listing, it's largely to fund their expansion in the insurance sector. When you just look at the performance of insurance companies, the uptake of insurance products, what do you make of the viability of insurance? Because the banks are doing well.
Yes, the banks are really doing quite well, but on the insurance side, things don't seem to be as rosy. I think a well-known commentator earlier in the year said that the insurance business in this market really doesn't make any money from the insurance. They make all their money from the investment side. So that's really something to have in mind when looking at the insurance sector in this particular region, and also comparing it with the direct investment companies. So that is one thing to look into, and the other is to also compare the various insurance players. Kenya Re on one side, we saw not very flattering earnings from Pan-Africa Insurance earlier in the week. So these are really issues to have in mind. That aside, looking at the local consumer hard hit by inflation, it's difficult to tell them to buy insurance products, while on the other hand, it's difficult to put food on the table.
The gainers in today's market seems to be some of the agro processors. Sasini up 2.2%, Kakuzi 5.2%. Is that a function of the shilling?
Well, it could be interpreted as such, but all in all, the market volumes have been very, very low over the entire week. And though we are seeing a lot of opportunity for the longer term investor looking out 18 months or so into the future, the volumes are not too enticing looking at that aspect of things. So yes, one could interpret it as a shilling kind of effect.